I'm Brandon Brotsky with Reach Home Loans, and I'm going to review with you the two main factors that will ensure that you get the lowest possible interest rate on your next mortgage. So number one, what goes into determining your interest rate? Well, what type of property are you buying? Is this going to be a single family residence, a freestanding house like you might live in today? Or is it a condominium? Because they each offer different types of interest rates based on the amount of risk they pose on the loan. Also, how much money are you looking to put down? Are you looking for the lowest possible down payment, or are you comfortable putting 20 or 30% down? Also, reducing the risk of the loan. How do you plan to occupy the property? Is this your new primary residence, meaning you're going to live in the home? Or are you buying this for investment purposes? You're going to rent it out, maybe Airbnb is an income property for you? Because those are each different types of properties, and they're going to give you different interest rates. So if you want the best possible interest rate, make sure you keep your credit score up and save up for a nice down payment. Factor number two in getting the best possible interest rate is, well, you probably want to compare lenders. Now, as much as that hurts my feelings, you should be working with me, right? I understand why you're doing it. I'm not making your mortgage payments, so you need to know that you're getting the best possible interest rate, which will result in the lowest possible payment. Right? It's always good to compare, make sure you're getting the best terms, but what do you compare? The biggest mistake people make when trying to compare lenders is getting overwhelmed and trying to compare all the costs involved with the transaction, when all that really matters are the interest rate that lender's providing, what those lender charges are, and in my opinion, most important, what's the level of service you're getting from that lender. Outside of that, all costs will be the same regardless of who's writing your loan, bank, broker, lender. So don't get overwhelmed, don't get confused by third-party costs that have nothing to do with your interest rate. Specifically focus on the rate that's being provided, the cost of that rate, and the other costs coming directly from the lender.